very much for the opportunity provided to talk more about the SDG Namibia 1. I think to understand where this concept emanates from, I'll just try to give a context before I go through the presentation. As you all know, Namibia, like most developing countries, needs fiscal space to support development. At the same time, we are constrained as a country from a fiscal point of view. So this calls for innovative approaches on how to identify financial models that are inclusive, financial models that don't place burden on the fiscals. So we've identified a blended financing approach as one of the tools that can release pressure from acquiring sovereign currency for financing projects. So a blended financing facility is an investment platform that crowd in different players such as philanthropic capital, development donor capital, private sector capital, FDI capital, and grant capital, just in short. And we use that to leverage private sector capital in terms of de-risking such capital for development and operational finance. So we are getting this instrument from the SDG Indonesia 1. So there's a blueprint on that one, where SDG Indonesia 1 managed to attract $3 billion without exposing the government balance sheet. And this is what we're working towards. And for us to achieve that, we've strategically partnered with climate fund managers, as well as the Investment International. When I say we, the Environmental Investment Fund of Namibia. So climate fund managers are a global climate asset entity that specialized in equity investment, and they've got a good track record with deploying capital through blended financing instruments. And then the Invest International is a development fund, DFI, for the Dutch government. So they use this vehicle to address global challenges through Dutch solutions. That's how they call themselves. So they're very good partners. And then the Environmental Investment Fund, of course, is an entity of the state and registered under established under an Act of Parliament here in Namibia. So we, the three entities, have come together and established this SDG Namibia 1 Fund with the aim to raise about $1 billion for deployment into the value chains of green hydrogen assets. And that $1 billion does not include leveraging, which can be 3 to 4 folds. Okay, let me start my presentation. So where do we get our mandates to come up with such structure? We are given these mandates by the Namibian people. We are creating international partnership through partnering with a variety of financiers around the world. We are investing in infrastructure that are critical to our development. We are creating good governance systems that can deploy capital to a portfolio that is required by the country, and creating another economy on top of the already existing economy by supporting the green hydrogen economy in the country. Then social progression, that's where all issues that we discuss of employment, poverty alleviation, etc., comes from. Yeah. So that's how a blended financing action looks like. Yeah. At its peak, that's where early investment comes in of development capital. So how it will be structured is this: there will be three funds: development fund, construction fund, as well as operational funds. Each has got its own risk profile. So at development, at the development stage, there's high risk capital required for that, and it's more concessional financing, that is grants, as well as low risk financing structures. At construction, that is after developing the project to final investment decision, that's where much of the equity will take place, and then at operation, that's where much of the low risk capital will take place. And if you look at those structure, at development stage is more grants, and it's high risk capital. So that is just in a nutshell how it looks like. So to your left, this is your left of my right, to your left, those are the fund managers. This is the climate fund managers, the Environmental Investment Fund of Namibia, as well as the Invest International. Then they created the SDG Namibia 1 Fund. To date, we have signed the Heads of Agreement, which is a partnership agreement that allows us to start sensitizing other investors on how to participate in this blended financing tool. And again, if you look at the structure of the fund, we're working with the ecosystem that involves international players, regional or international players, as well as that is on different stages of funding, development fund, construction fund, and operational fund, as well as domestic markets in terms of investment. So who are these regional or international partners that we're talking to? At an international level, we've started conversations with a variety of actors. There's been a commitment already, but at this time I can't mention the numbers. I haven't been mandated to mention the numbers. We are talking to the Green Climate Fund, to FMO, to KfW, to the European Investment Bank, etc. At the regional level, the African Development Bank has also started, committing resources towards the SDG Namibia 1 structure. Oh, I can see the MD of NetBank looking for a logo there, but we'll be coming to you. This is not exhaustive. This is not exhaustive. So we'll be approaching all domestic players on the financial market to participate in this SDG1. I'm told I'm left with 2 minutes. Okay. So that's how it looks like, from the detailed structure of the SDG Namibia 1 Fund. Again, the left side, those are the roles of each fund managers, as articulated earlier on. The right side is investors, typical instruments that could be followed by investors, that is debt, equity, mezzanine financing, grants, convertible loans, and or returnable grants, etc. So that funding will come in a pot, then deployed to different projects. What kind of projects are we talking about here? Is all the value chains of green hydrogen. So this is not a capital raising platform for the green hydrogen economy. But I think what's important to note, this is my last slide. What is important to note, each segment here has got its own challenges when it comes to financial modeling and the risks. So we have to come with tactical risk management and mitigation instruments to de-risk private sector investment, and that's where blended finance comes from. Use grant, public financing, and to de-risk private sector or private capital. I think I've reached the end of the presentation, and thank you so much.